Many traders walk into the market believing they are thinking clearly, yet something far more important goes unmeasured: their emotional state at the exact moment they begin to operate. Research from Stanford University and Carnegie Mellon shows that even small increases in emotional arousal can reshape risk perception, narrow attention, and accelerate decision speed. You might feel in control, but your internal state is already influencing how you interpret every candle. This matters because the quality of your decisions does not depend only on your strategy. It depends on the state of mind from which you execute that strategy. A calm trader sees structure. An activated trader sees threat. A stressed trader sees opportunity where none exists. Emotional state calibration brings this invisible variable to the surface, so you can manage it intentionally instead of letting it shape your behavior without awareness. The truth is that many traders enter the market already tilted without realizing it. Maybe you woke up tired. Maybe traffic stressed you. Maybe you missed a setup earlier in the day. These subtle emotional shifts change the way your brain processes information. They narrow your focus, distort your reading of market structure, and push you toward impulsive choices long before you click buy or sell. This is why emotional state calibration becomes essential. It gives you a structured way to measure your internal conditions before you engage the market. Studies in cognitive regulation from the University of Michigan show that when individuals consciously label and rate their emotional intensity, the prefrontal cortex regains control faster, reducing impulsive actions and increasing disciplined decisions. Welcome back to the ComLucro channel. This video is part of our psychology mindset workout for traders, and today you will learn a simple method to evaluate your emotional level before each session. When you understand your emotional state, you understand your psychological risk. A trader at level 2 makes very different decisions from a trader at level 7. Recognizing this difference early prevents the emotional spikes that usually lead to regret. So if you like this kind of video, please like, subscribe, and turn on notifications. And join the ComLucro community to support the channel and keep improving as a trader. Now that you understand why measuring your emotional state is essential, let us break down how emotional state calibration actually works. The purpose of this method is to help you become aware of your internal conditions before they influence your decisions. Most traders believe they are reacting only to price, but in reality, they are reacting to emotional states that formed long before the chart created an opportunity. When these states go unmeasured, they quietly distort the way you interpret structure, risk, and timing. The first step is establishing awareness. Before analyzing any setup, pause briefly and scan your internal environment. Notice your breathing, your posture, and the speed of your thoughts. Ask if anything earlier today might have shifted your mood. This simple moment creates a gap between your state and your actions. Instead of trading from automatic emotion, you begin trading from deliberate awareness. The second step is rating your emotional level. Use a simple scale from 0 to 10. 0 represents calm clarity. 5 represents moderate activation. 10 represents emotional overload. Giving your state a number makes it objective. It turns a vague feeling into measurable data that you can track and adjust. Once you quantify the state, its influence stops being invisible. The third step is identifying the emotion behind the number. Intensity alone is not enough. Ask what the number represents. Is it frustration from a loss? Is it excitement from a win? Is it anxiety from market volatility? Is it impatience from waiting too long? Naming the emotion reveals the direction in which it pushes you. It shows whether your state supports clean execution or threatens your discipline. The fourth step is matching the state to the right action. A low rating means you can proceed with your plan. A mid-level rating means you need a brief reset, a slow breath, or a quick review of your rules. A high rating means you step back and recover. This is psychological risk management. Trading in a state that works against you is no different from trading with a broken tool. The final step is stabilizing your mindset. After resetting or adjusting your emotional level, bring your attention back to structure, your rules, and your core process. Reconnect with the mindset that supports disciplined execution. With repetition, this calibration becomes automatic, allowing you to stay grounded even when the market is fast, noisy, or unpredictable. Now let us look at how emotional state calibration appears in real trading situations. Imagine starting your session after waking up tired or stressed. You sit at the desk and feel a slight tension in your chest or a sense of impatience. Nothing dramatic, but enough to tilt your focus. Without calibration, this state slips beneath your awareness and begins shaping your decisions. With calibration, you notice the tension, rate your emotional level, and adjust before the market exposes your state through a poor entry. Another common scenario is a sudden burst of volatility. A fast candle breaks structure, and your emotional activation spikes instantly. Even if your strategy does not require entering on that move, your nervous system reacts. You feel the urge to act quickly. When you pause for 2 seconds, assess your emotional level, and lower your arousal, the urgency loses its influence. You regain the ability to read the chart instead of reacting to the speed of the movement. Calibration also becomes essential after a sequence of small losses. Frustration builds quietly, and your emotional level rises without warning. You start seeing setups that are not actually there. You feel the pressure to recover immediately. When you calibrate your emotional level in this moment, you see the escalation clearly. You recognize that the market did not change, your state did. This awareness gives you the pause needed to prevent revenge trading. Positive emotional states can distort execution as well. After a big win or a strong winning streak, confidence rises and your emotional level increases. You feel sharp, in control, and more willing to take risks. Without calibration, that elevated confidence leads to oversized positions or trades outside your plan. When you measure your emotional level honestly, you notice that you are not calm, you are activated. That single realization brings you back to disciplined risk and structure. As you begin to calibrate your emotional state in real time, you see clearly how much it shapes your trading behavior. Instead of being pulled into hidden emotional shifts, you gain the ability to identify your level, adjust it, and trade from intention rather than reaction. The more consistently you apply this technique, the more stable, clear, and confident your execution becomes. Now, here's how you can start practicing emotional state calibration today. At the beginning of your session, take a brief moment to scan your internal state. Notice whether your mind feels calm, tense, rushed, or overly confident. Pay attention to your breathing, your posture, and the pace of your thoughts. This simple check prepares you to understand your emotional level before it begins to shape your perception of the market. As the session unfolds, recalibrate whenever you notice your emotions shift. It might happen after a sudden move, a missed entry, a quick loss, or even boredom during slow conditions. Each time you feel a rise in emotion or a change in your behavior, pause for a moment and rate your emotional level again. These small calibrations prevent subtle emotional drift from turning into impulsive actions. Your exercise for this week is clear. Perform emotional state calibration at least twice per session. Once at the beginning, before you analyze any setup, and once at any moment when your emotional level changes, even slightly. With repetition, the process becomes second nature. You begin to identify your patterns, your common triggers, and the emotional states that lead to your best and worst decisions. As you continue this practice, you will start to see how your emotional level shapes not only your execution, but your interpretation of the chart. Structure that once looked unclear becomes easier to read. Urges that used to pull you into the market lose their power, and the session feels more stable because you understand what is happening inside you with clarity and intention. You will not only trade with better decisions, you will trade with a better state of mind. Now, as we wrap up, I want you to remember where this fits inside your growth as a trader. This session is part of our Psychology Mindset Workout for Traders, a series where each workout strengthens a different pillar of your emotional performance. Keep practicing your emotional calibration, keep observing your internal state, and you will gradually build the mental stability that supports confident and consistent trading. Stay focused, stay aware, and I will see you in the next workout. Please also remember that our mission here on the ComLucro channel is to give traders the clarity and confidence they need to make smarter decisions in the market. Every video, every course, and every piece of content we create has one clear purpose: to deliver practical, easy-to-apply knowledge that helps you grow step by step as a trader. Here on the channel, you'll find complete courses on smart money concepts, technical analysis for day traders, and trading psychology. Because trading isn't just about charts, it's also about mindset, discipline, and risk management. We also share lessons and insights from some of the most respected names in trading, professionals like David Paul, Alexander Elder, Tom Hugard, Mark Douglas, Al Brooks, Larry Williams, and many others whose experience has shaped the way we understand the markets today. If you enjoyed this video and found it helpful, please give it a like. It really helps more traders discover our content. And don't forget to subscribe and turn on notifications so you never miss our latest insights and strategies. If you'd like to go even deeper and access exclusive content, early video releases, and additional tools to support your development, consider joining the ComLucro trader community right here on YouTube. It's a simple way to support our work and a smart investment in your own growth as a trader. Thanks for watching, and I'll see you in the next video.